Hi everyone. I'm going to be talking about the fall market and what I've seen and experienced so far. Seems like sales are modestly up over last year, but the overall dynamics kind of remain the same. We are seeing far fewer showings from buyers when compared to 6 months ago, and listing volumes continue to grow faster than sales. In fact, the condo market is seeing about 6.5 months of inventory, which means it sits on the market for about 6.5 months before it sells. And for detached homes, we're seeing about 4.5 months. It's a dynamic shift from what was happening 6 months ago, and let's see if we can kind of unpack some of the reasons why. Okay, so it appeared at the time the Bank of Canada was going to cut rates 3 times between now and January 25, with those cuts being 50 basis points. And it appeared that fixed rates were trending downwards as well, with a high likelihood that fixed rates would probably land somewhere around the 3% range next year. Then you also had the new federal government changes to insured mortgages, shifting to 1.5 million from the previous 1 million, and extending the amortizations for first-time home buyers to 30 years. All of this was kind of to stimulate buyers to jump back into the market. Okay, however, 2 weeks ago, the United States had a good, strong jobs report, and Trump just won the elections. So it's a little bit uncertain how much the Federal Reserve would cut rates, and maybe less than what we anticipated. And I heard today at CNBC about the Fed rate cuts and maybe less than what we anticipated. So what's caused the 5-year yields to go up is because Canada is kind of correlated with the US bond markets, and we saw a surge of 35 basis points. That might mean that fixed rates are going up rather than down. And all of this leads to kind of the uncertainty that we're experiencing, which is less buyers are putting offers on properties and an increasing amount of inventory that you see available. Hey, while a lot can change in the months ahead, the shift is in the sentiment. The uncertainty also elevates when you have all the geopolitical risks throughout Europe and the Middle East, which could surge oil prices, what makes it harder for central banks to cut rates when energy prices increase. It's also possible the combination of a strong economic boom down in the States, coupled with rising energy prices, could lead to far fewer interest rate cuts. But it's hard to say. Now, the average home price in Toronto was $1.332 million in September, down 2% the same month last year. And the median condos were about $706,000 in September, down 4% from the previous year, which just shows you that the buyers just have this uncertainty to kind of execute on offers, and the months on inventory exposure for any product, whether it's a house or condo, is just increased. So who does this affect the most? People that are over leveraged, and that's the truth. So I don't think you'll see a significant change in prices again. I don't see a crash in the market, but I do see maybe some sellers who are vulnerable to the exposure they have on the market in order to kind of escape the monthly payments that they're committed to. And those are the opportunities that buyers today can take advantage of. All this talk about waiting it out for a certain decrease in price, or just trying to draw blood in every listing, is not a good strategy. I think the strategy should be that you're aware that there's product out there. You've got a little bit more choice, but now is probably the most important for you as a buyer to be certain on what you're looking for and what it means to kind of execute on your deal. Love to see you again next time. Like, comment, and subscribe, and I'll continue with these videos. Until next time, ciao. But again, I can't see the market crashing, guys. So